Hello everyone, welcome to Elliottwave.com YouTube channel. Today is November the 13th and we're looking at the chart of the Dow future 60 minutes time frame. Now we've been doing a series of different indices in consecutive days so that you have an idea that all of them actually correlates pretty well, right? So all of them, majority still makes new all-time high, and the cycle that started from April, right, April this year, remains active and remains in progress and potentially is in the wave 5. But again, the lesson that everybody needs to sort of follow is that do not pick the top against the trend, guys, right? So I don't know how many times people try to pick the top in the indices since we bottomed many years ago, and you can see it keeps making new high. So it will be better to let the market itself know that the top has been in place by pulling back, and even so you can still buy in the dips every single time in 3 waves, right? And the key is really to buy at the extreme zone. Now here we do have a new high here in the Dow. Finished this with 4 in the form of an ABC zigzag with a truncated C leg. The C leg does not reach 100% of the A leg. Okay, then it has started to turn higher, break above this previous peak. So now basically this is ending with 3, this is ending with 4, and this is the 3 and the 4 that started from April, by the way. So if I copy this and look at the daily time frame, this is this one here. Okay, and the 1 and the 2 you can place it somewhere here. So basically it's a 5 waves. We are in the wave 5 higher from the April low. You can see there is still a divergence, right? So this is still reasonable to count it this way, but if the divergence get erased, then maybe we actually still in the wave 3. So maybe this is some sort of like a 1 2 and then like a nest or something like that. But as long as the divergence here is still here, then wave 5 remains a possibility, which is what we are showing right now as a more conservative view. Now again, we break to new all-time high, now of course we already have what looks like almost a complete 5 ways up from here, from 4. So as an alternate view, this is going to be ending 105, right? But it could be ending with 5. Now always the possibility is always there, guys. There's no question about that. There is always a couple of different possibilities. So we could have ended with 5 immediately and then finish this cycle and then starts to do the bigger pullback like this. But again, if you're doing that, you're picking the top again, right? You're picking the top. So don't pick the top. Always open up extension, because most of the time 9.9 out of the times you're going to be correct when you are trading with the trend, instead of you attempt to keep picking the top. So here we are looking to complete with 1 of 5. So we're going to open extension higher within with 5. Now soon we should be ending this cycle, yes. So it's kind of too late to chase, right? But once the cycle is complete, you got a 3 pullback. As long as that previous wave 4 is holding, we should be looking for more upside again. So we still gonna need to like the upside here, and any pullback is going to continue to be basically a buy in the dips opportunity still in 3 swing or in 7 swing. Now where will be the pullback go to? Well, at this point we don't know yet until we see the leg of the pullback, right? So as always, once you are able to see A and the B, you can measure using the Fibonacci where the C is supposed to end, which is between 100%, 161.8% extension of the A leg. And then typically wave 2 also should be around minimum, as a rule of thumb. It's not a rule, but it's a guideline, right? It's a good practice guideline. With 2 usually should be somewhere around 38.2%, but even the wave 1, I don't know where it's going to end. Let's assume it ends here, then it should be at least 47,810 as a best practice from the wave 2. It could go to 50, 61.8 and even lower. It all depends on how big this leg and this leg gonna be. So this line here, guys, is not to say that I know exactly where the A is gonna end, where the B is gonna end, but rather it is sort of like you should be expecting a trace pullback. But the A leg, for example, it could be, in reality, it could be this big, it could be this small, you know, we don't know yet until it really is pulling back. So again, once we got the A and the B, we can then measure the C. Until then, we don't know exactly what the area from the wave 2 is. Now again, you can use retracement to give you some ideas. Minimum 38.2 as a best practice guideline, but that's just kind of like a very rough, right? I mean, it can go to 50, 61.8, 76. So there's not really a specific level that you should be aiming for. But as long as we stay above 46,575, the previous low, we should be looking for more upside to continue higher within the wave 5 from April low here. Okay, now what will be potential target next? Well, since we have already made new high here, so I think the next target here, the best way is to measure it this way. Once you confirm 1 is finished, and then you kind of pull back, and 2 is also finished, and then you got another like up breaking above this previous peak again, you can measure 100% extension of this 1, 2 from the 4, and then you project 100%. That will be your target on the upside. But you don't know what the target is yet until you have confirm 1 and confirm 2 and break above 1 again. Then you project where it's going to go next in terms of the target level. The next target is going to be 100%, 161.8% extension of this 1 relative to 2. So project it from the 2. Okay, so that's the idea here, guys. And as always, if you want to get more updates on the indices, Dow, or any other ETF, stocks, Forex, commodities, you can check our service. Only 99 cents if you're a new member. And I'll see you all again next time, guys, and have a nice day, everyone.